Hey everyone, welcome to another edition of the Buddy Study Group. And we have Miss Rhonda Bills back with us today to talk to us about a traditional carrier that is, I guess, newer. It's definitely not new, but NGL, National Guardian Life, has been around since 2016. I think we know somebody who had a hand in building that product. I just can't put my finger on who that is. But anyway. I think they tend to be a bit of the Swiss Army knife of traditional long-term care, and they're a very, very interesting product, whether they're new on your radar or not. They offer all sorts of corners for opportunities for long-term care specialists and people helping people to plan for long-term care. So I'll stop blabbing. I'll let Miss Rhonda take it away, and we're going to talk product sweet spots, ideal clients. We'll talk maybe a little bit of underwriting, quoting applying if we can, some case studies. Feel free to drop any questions for Rhonda in the chat and I'll make sure they get answered. Thank you, Miss Rhonda, as always.
All right, so as Jason started out the conversation, NGL National Guardian Life, it's their home office is Madison, Wisconsin. So another strong Midwestern. A lot of the insurance companies are in the Midwest. So there we get another one in the portfolio there. They are a traditional product. So one thing I love right out of the gate, it means traditional, means it's going to be partnership certified. So I don't care if you have 100,000 in assets or $1 million. Most people at some point in time say, hey, when I'm gone, I'd like my kids to have what's left over, or I'd like them to have a little something. So to me, that screams partnership, and it does guarantee that dollar for dollar asset protection. And I'll get into even more how the NGL product for couples will even add, add to that asset protection. So typically what you do have with National Guardian Life is you've got 2 years of benefits, 3 years, 4 years, 5 years. They go to 6 years, and they right now we have the old Kmart blah blah blah. We got a blue light special going on. They have unlimited benefits. It is for a short time only because they are rolling out their new product. It's coming out fourth quarter. I did talk to NGL. They don't have a definite date, but it's rapidly approaching, maybe sometime November. So if you have anybody that you've talked to, been working on, I will give a big plug. Tell them we have a fire sale going on right now for unlimited. After that, we're going to be down to one company only, and it's going to be a hybrid with One America. So if they want a traditional long-term care, unlimited benefits, here's your last chance. So I'll throw that plug in. You better take it and run.
Thank you for helping everybody get ahead of that. Nothing like a little fire sale. Yeah, I know that can be scary words for us, but we'll have Mike Simonstad and Larry, who's back with NGL most likely to talk the new product when it drops. So this is probably a good exercise to remind everybody of what they have now that's really, really special to make sure you can help those clients who thought about NGL in the past. Hey, the format you really liked is potentially going away in a couple of months. So it's a good opportunity to reach out.
Well, and I just had a new appointment this morning, and I was, they were wanting unlimited. Her dad's already been in a facility for 10 years. So when I first showed her 3 years, 5 years unlimited with NGL, and I hadn't even got to the five and unlimited, we talked about 3 years, and she already chimed in saying, 3 years, it doesn't seem like much. My dad's been in there 10. I'm like, just hang on. And so, I really preface, let's do that unlimited. We do have it available, but it's going to be for a short time. So even if you're starting new appointments, you might bring this up to them. And so that's going to get a way to maybe you can get them to move a little quicker sooner than later kind of thing. Okay, so right now the downside with National Guardian Life is the maximum daily benefit is currently $300 a day. I do believe that part is going to be changing in November when they roll out their new product. So that's one, maybe I would say not so good news. We do have some carriers that'll go up to 10,000 and higher, but I would say right now that's probably the not so good thing is can go up to 9,000 or $300 a month. They are in a daily benefit for home care. So for any of you that are relatively new to the industry, when you talk about a daily benefit, Say if I have a $200 daily benefit, that means every day we're going to look at, see what services were performed every day, and you're entitled to 100% up to your daily benefit. So I always try to explain it this way. Insurance 101 is designed to replace your loss. It was not designed to make you rich. Okay. So if you had $150 of home care that day, we want to reimburse you. We want to take money out of your insurance policy to reimburse you to give you your $150 that you had to pay out of pocket. So it's designed to reimburse you. When you have a daily benefit, we're going to look at every day to see what your receipts were every day. A lot of the carriers, I've been around 29 years. We started out daily, then we went to weekly, then we went to monthly, and now we're seeing some of them kind of going back. But for the most part, we really like that monthly benefit. It gives us the chance to weigh those highs and lows. So let's say a typical client goes on claim and maybe they have start out with maybe 3 days of home care, but maybe they have an extra day or 2 days a week for physical therapy. And maybe those days they have physical therapy, it topples them over that $200 daily benefit if they selected a $200 daily benefit. So maybe the home care was 150, but with physical therapy, it was 300. Because you have a daily maximum of 200, the insurance is going to pay 200 and you're going to be billed the remaining $100 that you're going to self-insure. But when you have a monthly benefit, we're going to take your $200 a day, times it by 30 days. You're going to get $6,000 at the end of the month. So now if you have a couple days in the weeks that you didn't spend any money, we can use those days that you didn't spend it for the days that you may have toppled over. So currently with NGL, we are on a daily benefit. Stay tuned. When they roll out their new product, it's going to be going to monthly benefit, which is simply going to be a good thing. It's going to give more flexibility for your clients. Okay. So we've talked about the daily benefits. You can go up to $300 a day. We've talked about the 2, 3, 4, 5, 6 years benefit periods and currently unlimited for a short period of time. Right now, they are on a service day elimination period. So let's talk about service day. Let's say you have a 90-day elimination period and you have home care for 4 days that week. So the nurse came out 4 days to provide services, right? Because again, insurance is designed to replace your loss. So technically, we would subtract 4 days the nurse came out to provide services from your 90-day elimination period. Hence, you've got 86 more days of services to satisfy before that elimination period has been satisfied and your benefits kick in. Now, it may not necessarily be a bad thing, but a lot of times family members get very frustrated, the adult children, the spouse, the partner, because it's taking what 90 days you think is 3 months may take 5 or 6 months before they've satisfied before that insurance kicks in. So the families get frustrated. That's when you start hearing other carriers talk about calendar elimination period. So calendar means once the day the doctor certifies you need care, say September 1st, you count 90 days. Whether the nurse came 2 or 3 days or 7 days, we're counting 90 calendar days. You've satisfied your elimination period. Off you go to the races. We're going to start collecting those tax-free benefit checks. Okay. So that's another thing to watch for on their new product. It's going to be coming out with calendar elimination period, but currently we are on service day.
There are a lot of well-loved and important benefits that will likely be leaving NGL's product come their transition. But there's a lot of consumer-centric benefits that we've been, kind of yelling at the clouds saying, please, we want monthly benefit, please, calendar day elimination period that you're going to see once they do switch over. So, with some things leaving, some really good things are going to be coming too. Do you have any other specific benefits that you know about that will not be a part of NGL's transition, just so folks know, hey, I remember I had a client who liked this or that.
I know a couple things that are adding that's going to
Okay.
enhance.
Hey, that's good
So
too.
we're going to enhance from the daily to the monthly, right? We're going to I believe they're going to increase the 300. I believe they're going to go up to 400 a day, but don't quote me on that one. We're also going to go from daily benefit to monthly. Did I say that? Oh, and we're going to also add calendar day elimination period. And my favorite seems really small, doesn't look very important, but I love it. They're going to add alternate plan of care.
Mm.
So alternate plan of care says, you've got this legal contract that says, hey, we're going to cover home care, we're going to cover adult daycare, we're going to cover assisted living, nursing facility, we're going to cover all these services. But let's fast forward 20 years and your doctor recommends robot care. But I had a legal contract 25 years ago. It never spelled anything in there about robotics. And so now those policies are going to have alternate plan of care that says, fast forward in the future, if your doctor recommends a level of care that we did not legally put in that binding contract, we're going to cover it under that alternate plan of care. So I think about, 25 years ago, we just started talking about adult daycare. I can be in some remote areas and people still don't really know what adult daycare is. Yeah, they kind of heard about it. But think about now how much we use the term adult daycare today versus 25 years ago. So to me, that's a perfect example of why we want these policies to be user friendly going forward in the future. So that to me is a really good thing to have that going forward. Another thing, we do have the 3% and the 5% compound inflation, which I absolutely love, giving that alternative there. And we do have shared care. And this is really where I love National Guardian Life for my couples. If I have couples, I want to show them National Guardian Life. So typically your Mutual Omaha, your Thrivent, we've got Karen Nally and then her husband. They each have their own pool with their own name on it, waiting for the day from need care. But we're going to add that tunnel. We're going to share benefits. So now, if one spouse predeceases, but they still have money left in their pool, the surviving spouse has access to share whatever the other spouse did not use. Or if one spouse used it all up, they can go dip into my spouse's pool because anybody in their right mind would love to take a tax-free check from the insurance company versus calling up their 401k and creating a taxation event, right? Excuse me. What is unique to National Guardian Life is they say we never want Karen to take away from her husband's benefits. So we're going to give you a third pool. Now, if one spouse uses up their benefits, you go dip into that third pool. So you still each have your own 3 years or 4 years or 5 years or 6 years, but the third pool will have the same 2, 3, 4, 5, or 6, whatever you select. And I always explain it to people. Let's say you just got married and Karen had her checking account and Bill had his checking account, but maybe together you start off and you have a joint savings account. So now if you overdraft, you can go dip into it. It's just you both have access to go dip into that savings account.
Yeah, Jeff, you had a question?
I was just going to comment that New York Life has that same type of shared pool, so it's not totally unique to National Guardian Life. Just they have
That
the
is
same type. Yeah.
That is correct. I am aware of that. The main thing with New York Life is when you put that inflation in it, boom, it goes sky high. And I find typically a lot of our New York Life agents write these policies without inflation or they do such a low benefit. But you're absolutely right, Jeff.
Yeah, and I think where it looks valuable on its face just hearing about how, say, like a Mutual of Omaha or Thrive and shared care works. But what many don't know about those shared care riders is you even have to leave a year for the healthy spouse. You can't completely dip into your spouse's benefits. So if you have a case, where one spouse has a need for all of their benefit and then some, and the healthy spouse has no need for long-term care throughout their whole life, that's another year that's kind of sitting there unutilized that you had to leave available for that healthy spouse. So there's a heck of a lot of value in a shared third pool for sure.
Now, do you remember what I started out at the top of the hour talking about? NGL is a traditional carrier. That means they're a partnership. So not only do you have two pools guaranteeing dollar for dollar asset protection, Now you got that joint third pool. So now if one spouse uses all their benefits and they dip into the shared pool, that's giving two pools of asset protection, protecting the healthy spouse to make sure they have more assets to remain and live their lifestyle. So that's
100%.
where I love that. Because it is tax qualified, again, the benefits are all paid out tax free and maybe there's tax deductibility. So now let's talk a little bit about one thing that is really nice with NGL is they do offer a employer sponsored program. So they do have on their website, you can go in and click at their employer sponsored. You can click in which state you're talking about. It'll tell you the minimum number of applications that the employer must pay the premiums to get those discounted rates. Now, do know anybody, any of my friends, I know Diane and some of you, Karen, have been around. If you remember the old MetLife, John Hancock, Prudential, I got them all. Unum days where you could go in and when we did work site or multi-life, we used to call it, we wanted to look like group because we wanted the group discounted rate and we wanted underwriting concessions. Well, good luck today, other than if you go with the life insurance with the writer, which you always hear Jason talking about. But with National Guardian Life, we can set up an endorsed plan that you can get the group discount. What I like about it is it's not just a discount. They actually go back prior to the 2016, they go to the non-gender-based rate. So you have an employer wants to pay for a female, getting a 40% discount with National Guardian Life is huge. That is a really, really good thing.
Yeah, definitely. And you know, Rhonda, I think traditional long-term care solutions coming to what we would call, I guess, a true group market is closer than you think. I
Mhm.
think there's a ton of kinks to work out, but I think traditional long-term care in general is just so well suited to group business. It's really about who's going to step up in the near term and who's going to step up in the mid to long term. I'm sure there's even more carriers than we know that have it on a 5-year plan, whatever it may be. But that 100% deductibility for certain businesses and business owners, because all of the premium is long-term care is just so important. And to be able to bestow that partnership protection on employees really speaks volume for the impact of the benefit, especially for middle market employees. And like you said, if there's unisex pricing on any of them, huge, huge discounts for females. So there's a lot to like.
I talk to a lot of small business owners, self-employed individuals that still today do not understand that they can either A, get a tax-free benefit of long-term care, or B, they can deduct the premiums as a business expense. So not only will you share with them and gain them information on either tax-free and tax deductibility, that they're really, really like that. Then we can go and say, hey, guess what? You can discriminate. So now if you want to pay for your right-hand VP of sales and your HR director or two of your three salespeople, but not the third one, I mean, you can discriminate. It does not have to be a class action benefit. And then if you turn around and say, and we can get you discounted rates because we can get the unisex rates, non-gender rates, I mean, we're just adding more and more fluff to the pie there. And
Yeah,
then
because of the way that product is structured, it fits really well on the group side. The one knock I would give it to be fair is that you will still have to individually underwrite all these plans, but at the end of the day, the amount of benefit to the business owner, like you said, the tax deductibility, the partnership, the ability to discriminate, I think all of those things provide incentives that in the true group field we cannot provide to employees today.
yeah,
You may ask like, hey, Jay, like the hybrid life long-term care plans, as long as they have separately identifiable long-term care premiums, we can do that too. Well, none of the group carriers have to this point wisened up enough to separately identify their long-term care premiums. So we're not offering at this point that employer paid incentive of tax deductions right now, which is huge. That's one of the biggest problems that business owners are trying to solve every day.
And then we get to turn around and say, oh, by the way, this is a true long-term care policy. It's partnership. So not only if you buy the 3-year instead of a 5-year unlimited, not only can they tax deduct to get a tax-free benefit, and if you do use it all up, you guarantee asset protection. So when I talk to business owners, I think of it as, you're putting all your blood, sweat, and tears building your business. All those years, you're building up that business. At some point, you want to take the money that you've been growing in your business, take it over to your home, but you don't want to be taxed through it. So long-term care is a nice little bridge to allow you to do some of that. Take some of the money out of the business, take the deduction to yield you tax-free and give you some asset protection.
And,
Now, another,
some people do you have conversations, Rhonda, about like if you need extended care and you're going through that sort of asset spend down, do you take into account the percentage ownership of the business they may still retain at that time as part of their assets as well? So it's also direct protection for some of those assets.
So I had a case last year that I wrote, and you might have heard me talk about it,
Hmm.
but it was just an individual couple that was really interested in long-term care. And as I started talking to him, found out he is a partner in a small firm and there's 5 partners. So then they had me do a presentation. He says, can I offer this to my partners? And we did go to the work with NGL to get it set up to get that discounted code. When you have and you're talking to a business owner, if they have a partner, I'm here in Iowa, farmland, how many of these people inherit farmland from their parents? And maybe all the siblings own a part of it. Maybe they're not actually doing the farming, but they get the cash rent, but they own the land. They all have a vested interest in making sure they all stay healthy, right? Because how many times do you talk to people and say, well, my siblings all own it, my siblings and I own it, but if one of them doesn't want to farm, this one doesn't have the money to buy each other out, so we don't know what we're going to do because this one doesn't want any part of it, but nobody has the money to buy the other one out. You hear about that all the time. So you each have, they all have a vested interest to make sure they're healthy. So going in to offer a discount or a tax deduction to all business owners is a really good thing to do. It doesn't have to be farmers, but it could be if you get 2 or 3 business owners or, partners within a business.
100%.
Now let's
Yeah,
talk about,
I think sorry to interrupt you again, but I just think like the sort of theme we're seeing here is that NGL, by nature of the way the product has been built, they don't say no to much because another really good option that you have um, with NGL is your ability to pay the premium, right?
I was just going to
10
say,
pay and
we're
single
talking to
pay.
business owners. I've had a lot of people that are interested in paying that higher premium for 10 years and being done. I bring that up to every conversation I have. Now, sometimes if I'm talking to somebody in their late 60s and I already know they're retired, I'll say, this may not be so attractive to you, but I don't want to cheat you out of telling you what's available. Because if they go from me and talk to somebody else and somebody does show them a 10 pay, I don't want to have egg on my face because I didn't at least show it to them. So I always like to let them know what the options are up front and then kind of steer them where I think that they're probably is best to be headed for. But NGL does have a 10-year premium. Now, I'm going to be 100% honest. It's not always competitive to our Nationwide or One America or Securian or Bright House 10 pays, but they do offer it, particularly if you're working with business owners that may be attractive and you get the partnership. Because if you go to your Securian, Bright House, Nationwide, it's a hybrid, which means it's not going to be partnership certified. And I actually had a couple where the NGL 10 pay was higher than a Nationwide, but they wanted more long-term care. They liked the third pool, didn't care so much about the death benefit. They wanted that third pool, and that was worth it to pay it for them, there to pay the extra. Currently, NGL does have a excuse me, single premium. However, that will be going away. Not too worried about that one. We don't see that one come up too much there. So if we do single premium, it's kind of a no-brainer. You probably want to do a hybrid because then you get your money back.
I think another thing they'd probably, this is just conjecture. I don't know if you've heard anything or not, but I don't know what their plans are with their return of premium, but I feel like that is something that could possibly be in the crosshairs as well.
They
Not yet, Lynn, on your question in the chat, asking if NGL became a calendar day elimination yet. Not yet. Couple of months potentially is what we're looking at, November-ish.
Now I will tell you one America Nation or National Guardian Life is not going to be an easy fit for underwriting. It just is going to be case by case. I've had cases where NGL wouldn't take them, but Mutual of Omaha would class one, and they did, and they approved it and got it through. I had a recent case where NGL Mutual of Omaha said, don't even submit it. Thrive It said, we'll submit it at standard, and they end up upgrading it to preferred. I mean, it really does. This is why I utilize those email pre-screens with all carriers. I usually just keep it simple. I type up one email, boom, send it out, and then I just cut and paste, send it out to them all, make a note, wait for them to hear back, and then I save an email file with all my pre-calls. So if I have it, submit an application, I can go back there and attach it and be done. It's always interesting with underwriting. Some companies have more questions, some don't have any questions, some say, nope, wait 2 years. I just had a cancer case working on. Mutual of Omaha said select, Nationwide said give me 12 months, which is 2 months away. One America said, okay, we're okay. And National Guardian Life said, nope, we want 2 years. And so, I mean, it's just all over the board. You just always have to double check. But I will say this with National Guardian Life, they are probably one of the most generous when it comes to appeals process. They will actually, I don't win them all. If I get one spouse gets declined, one gets approved, but I have been able to turn several around, giving a more clear picture of what's going on, getting information from a different specialist versus the, whatever the doctor that they got them from. And they will take the time to actually look at it and not just do a black and white. No, thank you.
Yeah,
So
Rhonda, I had a couple of other things. I mean, NGL, we've been honest, they're not one for many underwriting sweet spots and taking cases where others won't. A couple of things I can just pull out of the old memory banks is I believe after 3 months full recovery from, I believe it's specifically knee replacements, they can consider for coverage, which is a little earlier than some other carriers. I also do know when you look at their build chart. Now, this is a weird one, but NGL actually has, I believe they still do, the lowest minimum weight on their build charts, which can come in handy, especially when you're working with females. A lot of underwriters really take concern with lower BMI and bone density issues. So NGL actually has kind of a very lower limit and actually show the lower limit on their build chart, which I think is an interesting one to think about. I can't think of any other really good underwriting niches from NGL, but if I find any, I'll speak up.
I, I
Weight or
didn't
weight?
I didn't know what you were talking about underweight. I don't know what that means.
Underweight, like low weight.
I'm
Well, well, if you
being
wait,
funny.
if you
I'm
wait,
not
I'll
I'm
tell you.
not underweight. I'm just being funny.
If you wait, I'll tell you.
Ta-da.
Who's on first?
I don't know what that means either, so that's okay.
Okay, what else do we got with NGL? Yeah, so kind of going back to Jason, I'm gonna be honest with you, everybody. I'm looking at you straight in the eye. When NGL first went on the road, introduced their product, and I'm gonna wait and see how this goes out. I'm not jumping on this bandwagon, which is kind of who I am on any product. When Care Scout comes out, I'm not gonna be jumping on that bandwagon right
Prove
away,
it.
But I will tell you. I've worked with Norm and Oscar, some of those guys way back from the Mass Mutual days, and so one thing that I respect with NGL is even though they're new to the long-term care industry in 2016, they've been around in life insurance industry, insurance and other products since like 1909 or something like that. but they really tapped into that third party administrator that used Guardian, Mass Mutual underwriting. So they kind of sat on the sidelines and then said, let's tap into somebody that's got experience with underwriting and claims and pricing. And then we're going to really define our product and put it on the shelf. So it took me a while to buy into it, but I really did. And I really like having them for my couples to offer. They are A-rated on the Lynn for their financial ratings. What else can we talk about, Jason, about NGL? That's kind of the
Oh, Rhonda, what can't we say? There was one thing that I just had in mind to talk about, and I completely forgot what it was.
Actually, can I ask a question as the rookie on
Of
this call?
course.
Rhonda, how does that claims process work? If they're looking at daily expenses, how does that flesh out in real
yeah.
life?
So typically most carriers and Karen Nelly, I know you're on here, and Diane, Renee, some of my peers here. Feel free to add to any comments. I'm not the end all, but typically companies are going to want you to send in your receipts at the end of the month. So they're going to have dates of services. You know, if home care was provided on Monday, Wednesday, Friday, or if you're in a facility every day, there's room and board, and then you may have extra. So, you know, they're just going to look line by line every day. What were the expenses charged for those services? And then what was the daily benefit?
Got it. Okay.
Me, Karen, anybody else that wants, Diane, Renee, anybody else that wants to chime in here? John.
Yeah, I think you nailed it too. Rhonda, one of the things I remembered what I was going to talk about with NGL, their underwriting was overhauled a few years ago in all states but California. So before they had kind of your typical story with health rate classes, depending on how you shook out in underwriting. Nowadays, in every state but California, they are pass fail on underwriting. So it's like the whole thing is essentially individual consideration at this point that you would see with other carriers.
Yeah.
So,
I'm glad you brought that up because I forgot to say that. Guess what? NGL's in California. Yay.
yes.
Not have New York. We still gotta leave Mutual of Omaha for New York. But
Boo.
uh, we do have California and they are on the older plan, which means they got their preferred plus, premier, or preferred rate one, rate two. One thing too, as Jason is alluding to, you get the premier rate, which is kind of their basic standard rate for everybody. However, I have had a few cases where the underwriting came back and they said, particularly if they have a spouse, they'll say, we don't want to lose this case because they know often if one spouse is declined, they're going to get mad, throw up their arms, and that makes us go back to the table and make us work harder and be humble, right? We got to turn around and resell it again. But what they may do is say, okay, we're going to let this spouse, but because of the health history, we're going to offer individual consideration, which means we may charge up, I think it's 25%, but don't quote me on that too.
Yeah. Definitely just always be careful, weigh your options, and remember what a decline can do to a client's record when it comes to applying to carriers that may be their second, third, fourth choice. So always remember that. We'll have Miss Linda on again at some point to talk field underwriting. That concept will absolutely be brought up, but NGL is a tough one. So you really have to do enough homework and you really got to feel sure about the answer that you get back from an underwriter. And, the answers you're being given by the client at the end of the day to make a decision whether or not to apply. It is nothing personal to NGL, but that's how you have to operate with companies that are a bit stricter on underwriting. Carriers can pull all the knobs and levers they want. They can choose a bunch of different combinations when they're building a product, and NGL decided to be a bit more conservative on the underwriting so they could make a number of other concessions elsewhere. So that's the nature of the actuary. Um, Rhonda, NGL redid their application process
Oh, yes.
about a year or two back, right? Um, how are you finding the experience of that? I mean, especially compared to the old, but just when compared to other traditional products or other long-term care apps
I
you do?
think about 2/3 of the states are on their new electronic platform. They still have some, about maybe a third of them that are on the old platform. I like the new platform. I don't have a problem with it. I know some people really love the Mutual of Omaha platform better. But basically, you log in, you put your agent information in there, and then you basically start out with the primary insureds and the secondary insureds. And then they will eventually get a code on their text on their cell phone to verify it's them. And it just goes through a much shortened, condensed version of the application. And anything you say yes, you're going to answer to, but it is streamlined. It's a lot shorter. And by the time we submit it at the end, they are already ordering. They've already done like RX prescription checks behind the scenes, and they're already deciding what information they need to order. So they still are doing the nurse interview over the phone. However, um, they and they still be ordering medical records as needed, but they're weeding through some of the cases that they may not have to order medical records. They're, if they've answered no to everything, they may be able to just go through and do the nurse assessment over the phone and maybe be able to issue them coverage. And I've seen those quick turnaround times coming through too as well. So I love that new platform. I also love on the back end when they get approved, guess what? You get electronic policy and you get an email, and now I mean, I don't have to mail out policies. I don't have to wait to get the policy. I don't have to mail out the policy. I don't have to make, I always like a copy of the policy schedule page for my files going forward. All that is at my fingertips and I have that accessible. And I can download it and save all those documents going forward. And then I can just review them when they physically get the email to sign their policy. I can meet with them and just meet with them again on Zoom and go through the policy and the schedule benefits of which forms they need to sign, don't sign, or electronically, they probably already signed off on it. Also, they can do electronic payment. So if they want to do an annual premium, but they want to set it up so they don't want to have to mail in a premium check like the old days, but sometimes people still want to mail in a check, so they can do that too. So it's just really user friendly, and I'm absolutely loving. I wish One America would get on the ball with that because I don't like mailing out those policies. But
Well, we've got some One America stuff to discuss that I'll give you when we kind of adjourn for today. But I also want to give a shout out to NGL's agent portal in general. I think it's a simple login process at the end of the day. Like once you're in, you're in. It feels like sometimes with other carriers, it's like who even am I anymore? How did I all of a sudden like have all these difficulties logging into my portal? NGL's has always been kind of very reliable from day one. But everything's laid out in a way that is super easy to find things, super easy to understand, and they give you a couple of different ways to quote. So even if you are not appointed yet, they do have a quick quote calculator where you can go through and actually normally you see this a little bit more stripped down with other carriers. I just put the link in the chat. But you get pretty much full quoting access without the formal illustration itself to the software without a login. And then, of course, you'll need to go through your BGA, make sure you have the carrier appointment, and get yourself a login to access the full agent portal. But I find both experiences to be really, really good.
yeah. Another thing too, with that electronic portal, we were just talking about. Oh, I just had a situation this morning talking to a couple in Virginia. Well, the husband actually wanted to see the outline of college policy. So you can go, to Jason's point, you can go on the portal and you can select the state. And instead of just getting a copy of the 150-page policy, you can actually click, oh yeah, I want the shared care, or no, I don't need the non-forfeiture, or I don't need this, I need this. So you can actually pick which things that you're referencing and download it and send it to them. So I actually love that as opposed to just having the whole policy
Super
outline.
big deal when you compare it to, you know, other carriers, like having it proprietary on their website as opposed to iPipeline. iPipeline, I love you. You've pushed us forward in many ways, but also Uh, so yeah, that is an underrated piece of this. Just the ease of access to everything is really, really nice.
And you'll also find there those tools for like the tax deductibility, the tax guides for business owners. You'll find the group discounts per state, how many the minimum you have to have. So yeah, I to Jason's point, their portal, agent portal is very friendly.
And for those of you Benefit Buddy, Quick Quote Calculator users out there in the Buddy system, when you look at traditional LTC for any of those modules, you're looking at, the conceptual pricing for NGL. For Benefit Buddy, it's connected directly to NGL's pricing API. So they've always been a very good partner of ours by offering us access and the ability to be in the calculator. So they get the benefit of those who are using the Buddy System tools get to look at their product in a completely different light. So we really appreciate them for that. And when we hear the official word on the changes over to the new product, we'll definitely have Mike and Larry and maybe even Norman will join us if there have been any significant underwriting changes that come with the new product so that we can give you the scoop directly from the horse's mouth. Is there anything else you wanted to go over with NGL that you liked, Rhonda?
I think I've hit the highlights unless anybody else has any other questions for me.
I think you have too. Feel free to ask any last minute questions, but yeah, NGL, there are some, again, well-loved features that are going to be changing soon. It's good to have Rhonda on for this refresh to remind you of some of those features. And, you know, I think the best thing you can do in this situation is watch out for whatever changes are planned, what's going away, and think about some clients in mind and restart some conversations. Hey, Jeff,
Hello, I got a quick question when you're done.
go for it.
You've mentioned Mutual of Omaha a few times, and I think there's a lot of confusion about Mutual of Omaha and NGL because of their changes in their corporate structure, creating a mutual holding company and everything else. Are they related at all, in a product sense or a marketing sense, or unrelated?
They're both traditional long-term care carriers.
That's
And there are very few, so the comparisons are happening with a very small amount of carriers, so they're often mentioned in the same breath whenever we talk traditional.
You mentioned agent portals and that kind of thing and comparing the two, and I thought there was perhaps something else going on that I didn't understand.
Oh
Uh,
no. No, so we were talking about Buddy System, but then NGL's own kind of carrier portal for their agents. I really, really like. It's a good experience and they don't hide access from a lot of things that agents typically need that clients ask for.
got it.
Karen brought up a good point too. Typically, with in the long-term care industry, we put a product on the shelf, we keep it on the shelf maybe 2.5, 3 years. We're going to take it off, file it. We're going to put a pretty new cover on, put it back on the shelf, and the new book on the shelf's got a really 25%, typically 20, 25, 30% higher price tag. Word on the street is these new rates are going to be really competitive. Oh, that's because they're also going to offer, two other things. They're going to offer partner discount. Right now, the NGL does not offer the partner discount where both of them apply. There's no extra discount. It's just factored in. On the new product, they are going to give a discount, so that's going to be good. And then the other thing with pricing. Oh, right now NGL acts like life insurance where they round up your birthday 6 months. So if my birthday is December 1st, and if I apply June 1, they've already rolled me up, counted me up, average, rolled me up to the new age. They're going to go back like Mutual of Omaha, One America, Nationwide, everybody else. So they're going to go back and say, okay, we're going to look at the actual date that you apply. What's your birthday then? And so to Karen's point in the comment is they're saying we're not going to see a big change like we typically see when the products roll out a new price tag. So that tells me that they feel really good about their pricing, but it tells me that they're going to make changes on their product. They're going to bring their product up They're going to get up to speed a little bit with the monthly benefit, the calendar elimination, the alternate plan of care, all those extra features. So that's another good reason to keep them in your back pocket.
Right. Yeah, I love that. Normally, all new products come with a new business rate increase, right? If you haven't been able to um, raise rates, what better way to do so than take the current product away and bring the new one back from the stock room and, oh, how'd that new price tag get there, right? So really encouraging thing to hear. And that we love when carriers are able to show confidence in their product and the way it's priced at the end of the day. So super important piece. If nobody's got anything else, I think I will wrap it there. But Gretchen, since it's the first time you've joined us in a while, I would love to give you, 5 minutes to talk about any goings on if you'd like. But I want to say next week we're going to have Brenda Group from One America on. One America has recently rolled out some new underwriting changes called Flex underwriting. And from what I'm hearing, it's some pretty interesting stuff that should speed up the process by a heck of a lot for One America. So we'll stay tuned for next week to hear from Brent, see what he's got to say. But Gretchen, go.
Hello, should we tell Norman he has a fan club here?
Oh, all these underwriters are blissfully unaware of how much people love them.
I know.
They think everybody is just their enemy, and everybody
Yes,
says underwriters are the enemy of salespeople, but they have
they're
fan
not.
clubs.
They're really not. Yeah, yeah. All right. So just a couple things I wanted to show you guys in the portal. First of all, if you don't have a portal membership, you can get a free membership. So just reach out to us or go to, actually, I wasn't prepared with that. Can you bring up the portal page link,
Oh,
Jason?
yes.
Um, Jason will bring up the link and drop it into the chat. But regarding the portal, we have a new banner feature here for anything that's like, whoa, hair on fire, we want you to know about. So when you log in, you might see a new message there that'll last a few days, depending on what the announcement is. And then always go here. Look here first for any new announcements regarding the probably regarding the portal itself and any enhancements. We're also sending out, I personally am sending out email updates. So if you see an email come from me, of course you want to open it because it's going to be very important. So, and probably has something to do with portal updates, marketing updates, anything that might help make your life a little bit easier, I hope. The other thing to look for on the first, next Wednesday-ish, is the next community partner newsletter. So always want to tell you guys if you have anything that you think we should be sharing in the newsletter, let me know, send me an email, whatever. So just get a hold of me and I'll make sure it gets shared.
Gretchen, can you show everybody our new website homepage? Because I don't know if we've actually
Yes,
shown that off, and I think it's
hold
just like
on
I
one
think it's a
moment.
stunner. And if you haven't visited our webpage in a while, the team did an amazing job giving it a facelift and then some. So
um,
you're due for a tour.
you are due for a little bit of a tour, and it might be a little bit of a shock to the system. So hold on one second. All right, here we go. There it is. Isn't that pretty? Makes you want to sell something, right? See? Your
It's
successful journey starts right here with this guy or gal. Yeah. So easy to find the link to log into the portal, the menu where you'll find the group individual sign up for the buddy system, the learning center, which is our blog. So yeah, lots of content and lots of changes. Mark,
Gone are the stock images of business people shaking hands, and in is your
not
long-term care insurance partner making you feel like you're on vacation.
yes, we like to do that. So yeah, so that's the new look.
Awesome. Well, thank you for sharing with us. We appreciate you all being here. Again, next week we're going to have Mr. Brent from One America talk us through Asset Care 2024, the new flex underwriting, the whole 9 yards. So, keep your eyes peeled for that. On Thursday for the worksite study group, if you all are so inclined, I'm going to be sharing a number of new updates that we have for group long-term care in the portal as well. So, appreciate y'all being here. Be well, and we'll see you this time next week. Have a good one.
Guys, thanks.